You mentioned about the institutional mechanisms that we are missing or not having in India. Now, the institutions are, after all, manned by people. And, you know, Ben Bernanke has been called as the maestro. In fact, he has said in his own words that, he's been also known for his incoherence. His Greenspan, that's right, Greenspan, I'm sorry. His significant half did not know that Greenspan was actually proposing to her. So Bernanke has been called as Helicopter Ben. I wanted to understand from you, how would you describe yourself, not through the media's eyes, but how would you describe yourself?
That's a very difficult opening question, Srinivas. But I would like to be described, not so much as describe myself, but I would like to be remembered for standing up for the dharma of the Reserve Bank, for standing up for the larger public good, looking beyond narrow interests of different constituencies. Right. I'm sorry I'm unable to come up with a catchphrase at this time. Of course, I was known as Baby Step Subbarao, etc., but that's a different thing.
Thank you. Thank you. You mentioned about the dharma of the Reserve Bank. Now, what the dharma of the Reserve Bank is being redefined through the MPC and the inflation targeting mechanisms. But before we jump on to that, I wanted to just understand, the types of crises, the external crises we are likely to face. And what is the one that bothers you? And can you give a time frame for that crisis?
In my comments, I did talk about the disbelief in India that we could be affected by a crisis like the subprime crisis. What was the reason for that dismay and disbelief? People said, look, in 1997-98, we had the Asian financial crisis. India was not affected. In 2007-8, exactly 10 years later, we had the subprime crisis. India is affected. What's changed in those 10 years? What's changed in those 10 years, in one word, is globalization. India, in the space of 10 years, had integrated much more deeply into the global situation than we were in 97-98. Both by way of trade and more by way of financial flows, India's integration into the global economy was much more substantial in 2007-8, therefore we were affected. So, in answer to your question, whatever happens around the world today, in today's globalized world, whatever happens anywhere has an impact everywhere. What happens in China? What happens in the UK because of Brexit? What happens because of Janet Yellen's speech tonight, Friday morning in Jackson Hole tonight for us in India? What she says will have an impact. Okay? So India is part of the global system. And what happens around the world, especially what happens in important countries, systemically important countries, has an impact on us. That's the reason we were affected by the taper tantrums. There were, of course, deep structural causes internal, but the proximate cause was external.
Thank you. You mentioned about deep structural causes which were internal. Are the banks a problem? Do you see, because the NPA levels in banks is a big problem. There are a number of concerns coming from both abroad as well as here. Would you comment on the NPAs of the banks? How is it going to resolve itself? And does that fall into the structural problems that India has got?
Yeah, when I talked about, excuse me, when I talked about structural problems, I was talking in the context of globalization and the exchange rate, but certainly the NPA problem, the balance sheet issue of banks is certainly a structural problem. I wish I could be original. So much has been said, so much has been written about that there's nothing new or original I can say. There were many causes for the NPA problem that Indian banks, particularly the public sector banks, are experiencing today. There was this foray into infrastructure, uncharted waters both for banks and for investors. There was regulatory forbearance by the Reserve Bank, motivated by the concerns of the crisis. First, the global financial crisis and the Eurozone crisis later on. There was implementation bottlenecks during the previous government. We know in the coal, in telecom, there were Supreme Court orders which inhibited investment going forward. So all these factors contributed to the impairment of bank balance sheets. And it is true that public sector banks have been impacted much more than private sector banks, but that's par for the course. That's the way Indian banking system is. So my answer to your question, a long-winded answer to your short question, is that it is indeed a structural problem, but hopefully we are looking through the tunnel. We're looking at the light at the end of the tunnel.
So at the root of the structural problem, is it the large government holding in the banks, or is it the large corporates taking a lot of loans?
No, I explained the root of the problem. I don't think government shareholding in banks is a big problem. It certainly is not a problem, but one of the factors that contributed to the NPA problem. But to attribute government ownership of banks as the sole reason for the NPA problem, I think would be wrong, misdirected, both for purposes of understanding and for purposes of policy directions going forward. We have so many cards going around here.
There is,
We've got to wait till Janet Yellen's lecture starts.
There's immense interest from the floor. Probably each one of the participants here has come up with a question. But while we are on banks, and probably it might be one of the relevant questions is, the trickle-down effect for the RBI is setting a policy, but it's difficult for the policy to trickle down to the banks. Would you explain that mechanism? Is it going to improve in the foreseeable future?
There is this issue of monetary policy transmission. The Reserve Bank sets the repo rate. And all of you understand, you're all finance sector professionals, I don't have to understand. I don't have to explain to you. If it were a lay audience, if I were talking to the Pensioners Association in Chandigarh, I would explain to them in a different language, but I don't have to go to that extent to you people. The expectation is that by altering the repo rate, the rate at which the Reserve Bank lends to commercial banks in the country, overnight rate, the entire interest rate structure in the economy would be affected, right? That's the understanding. But that does not happen automatically. The Reserve Bank has to work at it, has to maintain sufficient liquidity, or has to manage liquidity in such a way that the repo rate signal transmits to commercial banks and then to the entire financial sector. In the past, there were several factors inhibiting monetary policy transmission, including administered interest rates, including the fiscal stance of the government, including the shallowness of our financial markets. But many of those issues are getting resolved now, both because of the efforts by the government, both because of the efforts by the Reserve Bank, and because the financial sector has moved on. So I'm hoping that monetary transmission would be more efficient going forward.
Thank you. Inflation has been set as a target. There's a 4 to 6% target. the thought process, there was a Urjit Patel committee report that went into that setting of the target. So, but there has been one of the economists from a large public sector bank has come out with a opposing view that 4 to 6% is probably more than one standard deviation in terms of the history in inflation. So how valid is that target, and how do you see that to be met?